what will occur with the change of the US government. We're obviously moving quite quickly with respect to appointments or planned appointments that have yet to be ratified through the Senate, of course. And I suppose we're just asking ourselves, are we going to get Turbo Trump where we get no pushback at all, which is a bit unlikely, or do we get what you might call modified or tamed Trump? So there are going to be some trade-offs that we have to make. I don't think anybody really knows what's going to be effectively implemented. We know what's planned, but whether it can be implemented is a moot point. And in fact, you can invest to hedge a degree of that tamed Trump scenario. Will the tariffs really be inflationary? We don't actually necessarily think they will. We think that tariffs can be used as an inducement for inward investment into the USA. Some of the global car companies have actually made very profitable, productive investments in the USA, whether it's in Iowa or whether it's in South Carolina, where BMW make many of their SUVs. If tariffs are imposed on European car companies such as VW that want to shut factories in Germany, will they reestablish those factories in the USA? So it's not necessarily clear that tariffs are going to be inflationary. They might be an inducement for much needed private sector capital investment in the USA. Likewise, tax cuts. People get very excited about tax cuts, but we'll see actually what matters very much more than corporate taxes is actually keeping people in work and keeping people paying income taxes in high-paying, well-paid jobs in the private sector. There is a plan, as you well know, and this thing called DOGE, Department of Governmental Efficiency, to reduce the headcount, eliminate even certain government departments. Bear in mind that $2 trillion of savings will directly reduce US GDP and has to be replaced with something. What is it going to be replaced by? And in fact, the energy stock situation, we've long argued that any transition you make to net zero is going to have to use much more intelligently use existing hydrocarbons, fossil fuels, organic fuels, call them what you will. But I think that this electoral result is going to mean less risk for oil and gas companies around the so-called stranded assets. It's going to be less clear to us that the liabilities for closing down, shutting up and cleaning up those wells is going to lie with the companies to the extent it would have under a different administration. That's a risk that should lead to a higher PE ratio for those companies. Defense spending, will it go up? Will it go down? The peace dividend is going to mean less spending. But on the other hand, European governments are under enormous pressure to increase their spending to come into line with what they've promised under NATO. We think spending will go up, but will they buy US products such as General Dynamics produces or Raytheon produces? And China and Japan, I've mentioned Japan before. We think Japan is both misunderstood and still cheap. We're beginning to think China is at a turning point, and it is similarly misunderstood. That's a market that intrigues us. Our DNA tends to favor markets that are underperforming, shares that are underperforming and unloved. And we like to think that that's how you make the most money, is by going somewhat against the crowd.